Now, we're going to look a little bit at policy sequence, really looking at where we are from an economy standpoint. And I've got listed here really 6 different areas, from trade down to regulation, and what's going on in those areas. When you look at position, for instance, with trade, you can see that there are higher tariffs right now. There's been a big push this year to increase tariffs. And you might ask, well, how's that going to affect growth and how's it going to affect inflation? Well, growth, as you can see, is going to be inhibited a little bit because of tariffs, and inflation is going to increase a bit because of tariffs. Now, what I find real interesting is the way the news is portraying everything. When they talk about trade, they lump all of growth and all of inflation in with their conversations. And the problem is the trade isn't going to drive the entire economy relative to growth or inflation. And what we're seeing here on this chart is, yes, trade and also immigration laws that are being enforced are going to have a negative effect on growth, at least in the short term. However, when you look at the other 4 areas, we're looking at either neutral to growth or higher growth relative to fiscal spending, taxes being lowered, energy policy. The way they've enacted it is actually lowering energy costs. And then regulations for businesses are also lowering costs. So what does that mean for inflation on those 4 categories? Well, fiscal and tax would probably be neutral, but energy policy and regulation is actually going to be lowering inflation. And we've talked about this in meetings with our clients, that even though the trade and the tariffs is going to be inflationary for those goods, it's not for the entire GDP for the United States. So it's actually looking out pretty positive. Even though things might be slowing down a little bit now, we are setting the stage for higher growth and actually neutral to slightly higher inflation moving forward in 2026. And this chart really kind of helps you understand the inflation and what areas are actually being hit and how shelter and energy is actually offsetting the tariff hikes. This chart here on the left, this colored chart, really kind of shows the services, food, goods, and energy and how it is impacting inflation. And it goes back all the way to December 2020 when inflation started going up, and then August 2022 when it hit its high. And you can kind of see in August 2022, the 3 biggest areas that were being hit were energy, goods, and services. Everybody talked about the food because we're always going to the grocery store and seeing those numbers creeping up on us. But the biggest portion was services, energy, and goods. Now, kind of fast forward to today, and where's the biggest culprit for inflation? Well, most of it is services, because wages are going up. And because wages are going up, the cost of services are going up as well. So that's the biggest part of the inflation driver. And then you have the food, which is still higher. So that's the second largest. And then you've got goods. But look at the bottom of the chart for 2025 there. Energy prices are actually going down. And that, again, drives a lot of the other prices out there, keeping them a little bit more under control. And then on the right-hand side, the impact of tariffs on inflation. Well, if there's 100% pass-through, which is not happening right now, and no one anticipates that happening, it would have a much greater effect on inflation overall. 75% pass through, which is the, gosh, what would you call that? Fuchsia? Purple?
Yeah.
And what's that color? Okay, we'll call it purple. 75% pass through is still pretty significant, but what they're thinking more is closer to 50% pass through, or somewhere between 50 and 75%. Again, going back to where we think that's going to affect inflation and growth, short term, it's going to affect it for sure. Longer term, not so much.